Hey everyone, welcome back to Corporate Decoder, the place where we try to decode these big corporate filings and figure out what is actually going on. Today we are digging into a brand new announcement from Pioneer Bancorp Incorporated. Get ready because it involves something that could make their stock price move. Before we jump in, if you like getting these no fluff deep dives into company news, make sure you hit that subscribe button and the notification bell. Also, our Discord community is live and linked in the description below, so come join the conversation. Alright, so what is the big news here? Pioneer Bancorp is launching a new stock repurchase program. Now that sounds fancy, but it basically means the company is going to buy back some of its own stock from the public market. Why do they do this? Well, it can be a sign that management thinks the stock is undervalued or that they have extra cash and want to return value to shareholders. This latest announcement tells us that Pioneer can buy back up to 5% of its outstanding common stock. That is about 1,254,027 shares. This is not their first rodeo though. They actually just finished their previous buyback program, which was also for about 5% of their stock, and they bought back over 1.2 million shares at an average price of around $11.83. Now the shares themselves are traded under the ticker symbol PBFs on the Nasdaq Stock Market LLC. This new buyback program has no set expiration date, which gives them a lot of flexibility. They can buy shares openly in the market or through private deals or use special trading plans. The key thing here is that they will buy shares only when management feels the price is attractive, and it is good for both the company and its shareholders. They will be watching things like stock availability, market conditions, and of course their own financial performance. The company stresses that this buyback program can be stopped or changed at any time for any reason. They are not forced to buy any specific amount of stock or buy it within a certain time frame. This is pretty standard for these kinds of announcements, giving the company plenty of room to maneuver based on whatever economic winds are blowing. This whole announcement is basically a heads up that they are authorized to buy back stock. The actual execution, if and when it happens, depends entirely on management's discretion. This is a good time to look at their past performance and see if this buyback makes sense strategically. Now let's get into the nitty-gritty. While this filing itself is mostly an announcement about the buyback program, we should look at the context. Pioneer Bancorp is a financial institution in New York's capital region. They recently completed a mutual holding company reorganization and a related stock offering. That means they reorganized how the company is structured and sold new shares. This buyback is a follow-up to that. The fact that they are buying back shares after a stock offering can suggest a couple of things. One, management might genuinely believe the stock is a good investment at current prices. Two, they might be trying to support the stock price after the offering. Or it could be a way to manage their shareholder base by reducing the number of shares outstanding. When a company buys back its own stock, it can increase earnings per share because the same profit is spread over fewer shares. This can make the stock look more attractive to investors who focus on that metric. However, they are using their own capital. So we always want to make sure they are not sacrificing investment in their core business or taking on too much debt to fund these buybacks. Without seeing the latest full financial statements from a 10Q or 10K in this specific filing, we are basing our analysis on the announcement itself and past general knowledge of these types of moves. Looking at their previous buyback program where they repurchased about 5% of their outstanding stock at an average of $11.83 per share tells us they were willing to spend significant capital to reduce their share count. This new program with an identical percentage limit suggests a continued strategy of shareholder value enhancement through buybacks, potentially signaling confidence in future earnings. Now for our take on this, Pioneer Bancorp Incorporated seems to be actively managing its capital structure and rewarding shareholders. The new stock repurchase program without an expiration date gives them the flexibility to act when market conditions are favorable. This strategy can be beneficial for existing shareholders as it can increase the ownership stake per share. However, it also uses company funds that could potentially be used for growth initiatives, acquisitions, or debt reduction. A key risk for Pioneer is the timing and price of these repurchases. If they buy back shares at prices that later prove to be too high, they could be seen as inefficient capital allocation. Also, external economic factors can influence their ability to continue such programs. The banking sector is also sensitive to economic downturns and interest rate changes, which could impact their overall financial health and their capacity for buybacks. In conclusion, Pioneer Bancorp appears to be signaling confidence in its future by initiating another stock repurchase program. This move aims to return value to shareholders and potentially boost key financial metrics like earnings per share. We will be watching to see how aggressively they execute this program and how it aligns with their overall growth strategy. Alright, that is our quick decoder on Pioneer's latest announcement. What do you think about these stock buybacks? Are they a good sign for investors? Let us know in the comments below. If you found this breakdown helpful, please give it a thumbs up and subscribe for more. And don't forget to join us on Discord, linking the description so we can chat more. Thanks for watching, and we will see you in the next one.